Hi, welcome to the Market Alert for Friday, the 3rd of February 2017. So, yesterday the market opened. We'd had all of the news out prior to the open, and there was nothing to come out in the afternoon. So, the market traded sideways initially. We had the buy signal. This was filled, and then the market traded sideways and then started to show resistance. I'm just going to fast forward so I can show you what I mean. So you can see here that I've actually drawn on the 19,874, which is this high here, the market coming back and trading sideways. So if it's going to move higher, it's going to need to take out this this high here. Also, we've got this support here at 19,850. So if the market comes down, hopefully it would find support here before moving lower. The good news is, even though there's a 42-point risk, this would have shown a sell signal had the market closed back below the 19,850, so mitigating some of the initial risk on this trade as well. Now the upside, as I have said before, is fairly weak at the moment because of the backdrop of the Trump honeymoon being over, the implied volatility in the lows, and the distribution of stocks. So anything you get to the upside is a bonus at the moment. You can see the market there trading back up to the 19,874 in this bar, and then you will see the market drive through it. Now what's interesting here is if you have a look at the volume, I left this on specifically, you can see that even though the market's driven through here, you would expect to see an increase in volume, but that's not happening. So we know immediately the prices are just being marked up and not being bought. So we hit the scalp, and as it's driven through, I want to give it a chance just to see if it will actually move a bit higher. I was hoping prices would go up to the 19,900 level, but as you can see, it was struggling. So what I've done is remove the initial stop, move the stop to break even, and if it comes back, then I will actually take the profit off the table, because as I said, the upside is really a weak market at the moment, and there you can see it coming back and the trade being stopped out. So then it was a matter of waiting. The market actually came back, and then Murphy's Law stepped in and the market moved higher, but again, low volume, no driving of this market at all. And also, if you actually look here, you can see that the volume actually increased in this bar, which is narrower in range than the previous bar, and then prices move sideways, they break back below, we get a sell signal, and the sell side is the better side at the moment. Market trades sideways below the 20 bar average through the scalp, and what I'm doing now again is moving the stop to break even because we've driven through, and then you'll see the stop being trailed. We've got this support at the 850 level, and now what I'm doing is doing 50% above the lower highs, and then the market comes back and takes it out for a profit. And then I sent a note out to say I expect the market to go sideways because of the non-farm payrolls, which is exactly what it did until later on in the session. I think mine runs out any time now because I stopped recording, turned everything off. But this is the complete picture. We did have another buy signal here for anybody that did trade this back to the upside, but just the two trades there for me. In the daily chart, well, we're sideways at the moment because the market doesn't know what to do. They don't know what Trump's going to do next. And of course, what we've got today as well, which I said wasn't out yesterday, is the non-farm payroll. Apparently these are out on the first Friday. For some unknown reason yesterday I thought they were out the second Friday. So we've got these coming out today. The forecast is for to show the creation of 170,000 jobs. The previous was 156. We'll have to wait and see. That's at 130. And when the market's open, we just got the manufacturing PMI, no problem being in with that one, and then factory orders. But the big one today is the non-farm payment figures out at 130. And finally, in the implied volatility, 9.84, this is pulled back again. That's because the market was sideways for most of yesterday, Again, we're below the 10% area, which is again indicative of a big correction coming in this market. At the moment it's nice and steady, which is great. I hope it stays this way because the volatility at the moment is just perfect, and the momentum as well. You don't want, as I said yesterday, 60 or 70 or 100 point bars, because it's just too volatile and also creates slippage. So a nice steady decline down would be great, with the odd day of volatility, obviously, because we need to find the bottom of the market by looking for a 100% increase in the implied volatility. That's generally a good indicator. Let me just put that back. Clicked on the wrong thing there. So that's what we're looking for. As far as today, wait for the non-farm payroll figure, see how the market reacts, and then we'll take a view from there. Right, that's it. As ever, thanks for your support and also for watching. See you in the next one.